Every single morning, before the rest of the world wakes up, I sit down on my charts and make more in the first hour of the day than most people make in a week. I'm not gambling, I'm not guessing. I'm trading one concept that institutions have used for decades, but almost no retail trader understands. It is called SMT divergence, and it's the real reason price moves the way it does. When you learn how to read SMT correctly, you'll start to see what the banks are doing before the move happens. And that is how I scalp the futures market every single day with precision. And by the end of this video, you'll know exactly how I use SMT to spot reversals, catch high probability trades, and turn ordinary mornings into four-figure trading days. Let's get into it. So what is SMT divergence? Well, let's start simple. SMT stands for Smart Money Technique or Smart Money Tool. It can also mean Smart Money Time, and I'll explain that later on in the video. But it measures divergence between correlated markets. For example, the Nasdaq or NQ and the S&P 500 ES, usually they move together. But when one of them makes a new high and the other one doesn't, that is a red flag. It means smart money is distributing, taking profits, while retail traders are still buying the breakout. I call that hidden weakness. When you learn how to spot this in real time, you'll start to trade with the institutions instead of against them. So here we have NQ on the left, we have ES on the right. We see here that ES has had a high resistance liquidity run where we have swept out the low to the left, we have taken liquidity, and we have closed above down close candles. So we have a liquidity grab and we expand away from it. At the same time that ES has taken liquidity, NQ did not take liquidity. So in NQ, we made a failure swing. So this is where smart money time comes in because it happens at the same time. Remember, it is first time, then it is price. So why is SMT so powerful? SMT works because liquidity moves across correlated assets. Big money uses one index to engineer a false move, while quietly positioning in the other. Think of it like two thermometers. If one spikes while the other stays cool, you know something is off. That is exactly how SMT exposes liquidity traps. I use SMT as my confirmation layer. As soon as I see divergence at a key high or a key low, I immediately drop to the 1 minute chart to refine my entry. It is a trigger to look for an expansion in the market. It reveals hidden market manipulation, it confirms liquidity sweeps, it filters out false breakouts, and it provides early entry signals. Now, in this example, we can see that in Q, I want your focus to be on this bullish expansion candle. We have small wicks, big bodies. This is my expansion candle. We see that this candle failed to take out the previous candle low, while ES has swept out the low. So this is also a form of SMT. It doesn't always have to be clear highs and lows that swept and not swept. It can be the previous candle high and low. It can be time-based liquidity, but more on that later on in the video. So what is my daily scalping routine? Well, every morning at 9:29 a.m. Eastern Standard Time, I open up my chart and I look at ES and I look at NQ. I then switch on my live trading and share my screen, and because I trade live every single day in front of hundreds of people. So if you want to see me trade live, and if you want to trade alongside with me and have me review your trades and learn the exact model that I use on a daily basis, check out the second link in my description below for the Mentorship Program. But then as soon as 9:30 New York Open approaches, I'm watching both NQ and ES at the same time. So what I'm watching is I'm looking for important levels. I'm looking for an imbalance in the market. I'm looking for liquidity in the market. So let's say that NQ has taken out the low and we have closed back above, but there is still a major pool of liquidity resting below it. I'm not interested in this. So What am I going to do then? Well, if ES has traded into that same area of liquidity, then what do we have? Yes, we have a potential SMT divergence. I then want to see what happens. Then I'm looking for SMT between the two. So if we get SMT then, let's say NQ on the left doesn't take out the low, but ES comes back down, sweeps the low. Now, what are we doing? Well, first of all, we're seeing that we do have SMT. NQ didn't take out the low, while ES did take out the low, and ES also took out the major area of liquidity. At this point in time, that is where I'll look to my lower time frame, normally my 15-minute and my 1-minute, and I'll start looking for my trade. Now, what is my actual trading criteria? Well, after we get SMT out of a pool of liquidity, I expect the market to trade bullish. Same way, if we sweep out the high and the other asset didn't take out the high, we expect the market to trade bearish. So with this example, we have a bullish mindset. What do we want to see in a bullish market? Guys, everything is done on liquidity. So ES, I'm looking at ES. Well, I want to see if ES can respect bullish order flow. If we can engineer lows, sweep out the lows, and show support by closing through down close candles, that is a sign of bullish momentum. If we can form fair value gaps, we trade into them and be displaced past down close candles, that is a sign of bullish momentum. So I want to see bullish momentum enter the market, and I want to see the market respect bullish points of interest. Taking a quick break from the video, if you are enjoying this and you want to see exactly how I trade live every single day, check out the mentorship link below in the description of the video. You will become a funded trader in 90 days or less if you follow everything I teach you. I have created the Simplified Traders Mentorship for traders who are serious about turning this into a full-time profession. Inside, you will get access to daily live trading sessions where you see how I, a 7-figure trader doing this for more than a decade, trade live every single day. You will get direct 24/7 mentorship and support from a full-time staff so that you never trade alone. You also get access to an in-depth trading course where I teach you everything from what is a candlestick all the way down to advanced entry models that works in any market with any time frame. So if you're a scalper, day trader, swing trader, position trader, I teach how to read price action and how to trade based on price action. You get access to our funded trader roadmap, where my students are busy using to getting funded day by day. You also get a professional trading journal where you can track, refine, and optimize your trades like the professionals, like they do it. And you will also get an exclusive inner circle community of like-minded and supportive traders. We do not want you to do this alone. So if you are serious about becoming a funded trader or becoming a full-time trader, I highly recommend that you check out the Mentorship Program. And you don't have to take my word for it. Just have a look at all of the positive reviews that our program is busy getting, because we offer real support. This isn't an empty course. We give step-by-step guidance, and you can trade alongside me every single day. So recapping the trade I took today live in front of my students, I'm looking at NQ and I'm looking at ES on the 15-minute time frames right before 9:30 open. And if you think I'm cherry picking, I'm not. This is a trade breakdown of a live trade I executed in front of hundreds of people. There's no way you can fake that. So I'll also share a snippet of the video that I took during the live session. So looking here at NQ and ES, NQ is on the left-hand side, ES is on the right-hand side. What can we see? Well, currently, we do have bearish SMT between the two, where we see that NQ has taken out the high to the left, while ES didn't. So again, now something is going on. Also, looking at the lows, we see that the 845 candle made a swing low on ES, but failed to make that low on NQ. So we also have SMT. Dragging out this swing point, we see that ES has taken out the low while NQ hasn't. So that is also a sign for a bullish continuation. And in the day, I was anyway bullish. If you want to see my daily breakdowns and daily market analysis videos, you can check them out in the description below. Playing price action forward, what am I looking for? Well, over here, I got interested in both of them because we can see that ES has failed to take out this trend line liquidity. We have swept out the fair value gap and we have failed to inverse it. So we are bullish on ES. But looking at NQ, NQ swept out a high resistance liquidity low because this was the low that swept out liquidity that created the new high. NQ failed to take out that same low. So if I mark out that low, we can see that if I hover my cursor on it, it is a 730 low. So if I draw a box around it, these are the two lows that I am referring to. We see that NQ has swept it while ES has failed to take it. This, ladies and gentlemen, is called smart money time. Because at the time where we swept out this 730 low, ES failed to do so. So in this example, I was looking at NQ for a potential trade. Playing the market forward, we see that both markets have rejected the lows and we are chasing higher prices. It was at this point where I started looking fully at NQ, and I'm going to my 1 minute time frame because I want to see if we can respect bullish order flow. Like I shared in the beginning of the video, I'm expecting bullish continuation. So I want to see if the market can respect bullish order flow. So what is bullish order flow, you might ask? Well, just full screening this. Bullish order flow is swing lows and bullish fair value gaps. Over here, we form a fair value gap. So I want to see if the market can come into these gaps and not invert it. If we respect the gap, we are respecting bullish order flow. That aligns with my bullish narrative because of that SMT. Playing price action forward, what do we see? Well, we trade away and we form another bullish fair value gap. Given it is a tiny one, but it is still a valid fair value gap. So I want to see if the market can respect that gap. Well, here we did respect that gap. So that's at this point, that is where I pulled the trigger, stop loss covering that low. And I want to see at least a 2R out of this trade for a first target. And this was the trade I executed live. So now I have secured 2R and I can let a small partial run. Where do I let that partial run? Well, we go to our higher time frame to look at potential targets. Well, we can see that we are trading into a fair value gap and we have taken out relative equal highs. We have also completed this market maker buy model. So I wouldn't recommend holding this for much longer. So what is a technique that you can use to squeeze out more in this market? Well, look at this expansion leg of price. We are expanding and we are respecting bullish order flow. So as soon as we form a bearish change in the state of delivery, that is where I will exit my trade. Playing price forward, we haven't formed that yet. Let's see if we can form that bearish order block. What happens here? Here we can see we sweep out liquidity. We take out the high. So if we can close below this up close candle, that would be a bearish order block. As soon as the market closes below that up close candle, we form bearish narrative. And there we go, we close below. So the second partial was taken out at that point in time. This is how you can manage your trades to squeeze the most out of the market. And let's just have a look at what happens as soon as we form that order block. We see the market does eventually turn around and trade back to our entry point. Trading is simple. So why do most traders fail? The actual execution of the trade is extremely simple. But yet, still 90% of the people fail at trading. And the reason that most traders fail isn't because they don't work hard. It's because they lack clarity. They don't understand why price moves. They chase setups that look good but lack intent. SMT gives you that missing edge. It is not a signal, it is insight. And when you combine that with discipline, risk management, and a structured process, you stop gambling and you start trading professionally. Inside my mentorship, we go way deeper than what I can show on YouTube. I break down live SMT setups every single day, review funded account challenges, track performance through our professional trading journal. You'll literally trade beside me, see every entry and every exit explained in real time. And you get the accountability you need to become a consistently profitable trader. So if you have been watching from the sidelines, this is your sign. Click the link, join today, and I'll see you in a live session tomorrow.